So the overview for this module, what we're going to be covering here is the importance of reporting non-financial information to reflect the value added by cooperatives, to review adherence to the 7 principles of cooperatives, and to introduce performance reporting frameworks. Finally, we'll consider how cooperatives can reflect community and environmental impact. So, further objectives for this module is to explain the importance of non-financial performance reporting and the various frameworks that can be utilized to provide non-financial reporting. So there's a wide array of frameworks, 80 plus, but we're going to focus on International Integrated Reporting and the Value Reporting Foundation, Reporting 3.0, and Accounting for Cooperative Transformation. The idea here is to describe how cooperatives can understand and promote the work that they've done or could do in their communities and environmentally. So telling the cooperative stories through the 7 principles is very important in terms of maintaining the cooperative identity. Cooperatives and credit unions can certainly tell much of their co-op story through non-financial KPIs. Most for-profit enterprises also report KPIs in their annual reports. TD Bank is a prime example of a really comprehensive non-financial reporting. So co-ops should also consider doing this to demonstrate how they differentiate from their peers in the non-co-op world. So, for example, co-ops could report on the 7 principles of cooperatives, but not many of them actually do. But what I've noticed in a lot of co-op annual reports is that they are doing work that could correlate to the 7 principles, but they don't actually present the KPIs in that format. So, the non-financial reporting frameworks, it's important to use non-financial information to reflect value added by cooperatives. As I mentioned earlier, there's a wide array of reporting frameworks, for example, Accountability 1000, GRI, Value Added, International Integrated Reporting, Reporting 3.0, to name just a few. So frameworks, though, continue to evolve. For example, in June 2021, the International Integrated Reporting Council and the Sustainability Accounting Standards Board, SASB, merged to form the Value Reporting Foundation. So it's important to select the relevant reporting framework. And on our CARC website, you'll see a button for Measure Smart, and that's a listing of some of the frameworks that we have encountered, and I'm sure there's more that need to be added there. So when you look at it, if you see more that are not there, you can let me know. So cooperatives are adopting some of the relatively new concepts of International Integrated Reporting and Reporting 3.0. However, it's important to consider whether these frameworks that are used and were developed for investor-owned businesses, are they really the best method to demonstrate cooperative performance? So with the merger of International Integrated Reporting with SASB to form the Value Reporting Foundation, we'll just go back and have a look at the beginnings of SASB, which was formed in 2011 as a nonprofit organization to help businesses and investors develop a common language about the financial impacts of sustainability. So SASB guides disclosure of financially material sustainability information by companies to investors. SASB standards are available for 77 industries, and they identify environmental, social, and governance issues that are most relevant for financial performance in each industry. So through this merger, the resources, including integrated thinking, integrated reporting, and SASB, they can either be used alone or in combination depending on the business needs. So looking at the Canadian setting, in Canada, Vancity and the cooperators, I would contend, are leading examples in terms of innovative and meaningful co-op reporting. And so there's a video in this module of an interview I did with Julia Robbins from Vancity when I spoke to her about their approach to reporting. Remember, these are just frameworks. Co-ops have the option of determining what should be measured and reported. Whenever you report non-financial information, you have to make sure that you deal with issues related to data validity and comparability. And benchmarking of co-ops versus investor-owned businesses is also important to consider. Currently, there's no publicly available benchmark to compare cooperative performance. Also, there's lack of attention on the measurement related to the United Nations Sustainability Development Goals. So I'm working on a project with Dr. Daniela Senkel, the University of Guelph, and we're looking at the adoption of integrated reporting at a cooperative, and we're looking at how this reporting framework actually impacted or can be reflected in integrated thinking. So is it really changing what they're doing in the organization? A new project, Accounting for Cooperative Transformation, known as ACT. This is a project led by CEARC, but is done through Participatory Action Research. So it's a framework that's developed by co-ops for co-ops. So participants chose 20 indicators that reflect the United Nations SDGs, as well as linkage to the 7 principles where feasible. So this framework will provide cooperatives with benchmark data to help them evaluate their performance in relation to their peers. Our pilot included small, medium, and large co-ops operating in urban and rural areas from Newfoundland to British Columbia, and included a wide array of co-op industrial sectors. So starting off with this project, CEARC first worked with Cooperatives and Mutuals Canada to review the SDG measurement tools that currently exist and how or if co-ops are using them. So we had a review that entailed a scan of the websites and annual reports of the top 50 co-ops globally and the top 50 in Canada. And Dr. Fiona Dogood has written a paper on this research. We further had more work done on this project through a grant from the federal government, a SSHRC grant, and here we worked with, again, with the Industry Association, Cooperatives and Mutuals Canada, to identify which SDGs are beneficial in measuring cooperative performance. So we worked with a group of 20 cooperatives, and they selected eventually 20 metrics that reflect SDGs, and also, to the extent possible, were linked to the 7 principles of cooperatives. So in terms of how this project was done, we started off by generating over 400 SDG metrics. So we then used 4 criteria to identify, of those 400, which were the best ones. So the criteria we used were, was it important for stakeholders? Was it feasible to even measure this and get the data? Relativity, and sector specific. So we completed a survey of the 400 with our 16 project participants. They then selected 25 metrics from 50. A new survey of the 25 metrics was then issued by a CMC to get wider input, and from there we reduced the list down to 20. So And as well, some of the metrics, not all of them, were actually linked to the principles, the 7 principles of cooperatives. And there's more information about that on the CEARC website. So the Living Lab for this module is to apply the What Counts concept from Corder, Mook, and Richmond. Apply that concept to your cooperative, and also identify metrics or narrative information in your cooperative's annual report that reflects the 7 principles as well as the 17 SDGs. So a little hint here, do this in a table format to make it easier to display the actual indicators being used. So that concludes Module 3 overview.